Imagine a world where a single flower could buy you a house, or even a fleet of ships. This might sound like a fantasy, but it was a reality in 17th century Holland. This wasn't a fairy tale, but 17th century Holland during the peak of the Tulip Mania. The entire nation was captivated by the beauty and rarity of exotic tulips. It was a time when the allure of exotic tulips gripped the nation, leading to a speculative frenzy unlike any seen before. People from all walks of life were drawn into the tulip trade, hoping to make their fortunes. Fortunes were made and lost overnight, all on the whims of a flower. The prices of tulip bulbs soared to unimaginable heights, only to crash just as dramatically. But how did a simple bloom spark such madness? The answer lies in the human psyche and the timeless allure of getting rich quickly. The story of the Tulip Mania is a cautionary tale of speculation, greed, and the human desire for quick riches. It serves as a reminder of how easily markets can be swayed by emotion and irrational exuberance. It's a story that still resonates centuries later, offering valuable lessons about the fragility of markets and the dangers of financial bubbles. The parallels to modern financial crises are striking and thought-provoking. Join us as we delve into this fascinating period, exploring the historical context, the rise and fall of the tulip market, and the enduring legacy of this extraordinary episode. We'll uncover the social, economic, and psychological factors that fueled the tulip mania and draw connections to today's financial world. The 17th century marked the Dutch Golden Age, a period of unprecedented economic prosperity and cultural flourishing in the Netherlands. The newly independent Dutch Republic, freed from Spanish rule, established itself as a major player in global trade and exploration. Its ships sailed across the globe, bringing back exotic goods and spices from the East Indies. Amidst this backdrop of prosperity, a new fascination took root: the tulip. Originally from the Ottoman Empire, tulips arrived in Europe in the late 16th century, their vibrant colors and exotic allure captivating the imaginations of Europeans. The Dutch, known for their love of gardening and beautiful things, were particularly smitten. Tulips, with their intricate patterns and vivid hues, quickly became a symbol of luxury and status in Dutch society. The wealthy and elite vied to possess the rarest and most beautiful varieties, displaying them proudly in their gardens and homes. As demand grew, so too did the price, transforming the tulip from a simple flower into a coveted commodity. This demand was further fueled by the tulip's unpredictable nature. The most prized varieties, known as broken tulips, exhibited stunning color variations due to a virus. This viral infection, unknown at the time, created unique and highly sought-after patterns, making these tulips even more desirable and valuable. As tulip prices soared to unprecedented levels, what began as a fascination among the elite quickly spread to the middle and even lower classes. People from all walks of life saw an opportunity to make a quick fortune. And soon, everyone from merchants to carpenters, farmers to blacksmiths, was caught up in the speculative frenzy. The tulip market transformed into a whirlwind of buying and selling, with prices rising to dizzying heights. Tulips were no longer just flowers. They had become symbols of wealth and status. They were investments, traded on exchanges and in taverns across the Netherlands. People mortgaged their homes, sold their possessions, and even borrowed money to invest in tulip bulbs, pouring their life savings into what they believed was a surefire way to riches. The air was thick with both excitement and unease, a potent mix of dreams of wealth and the fear of missing out. Families were torn between the hope of a prosperous future and the anxiety of potential ruin, as the market's volatility created an atmosphere of uncertainty. The speculative bubble grew larger and larger, with each passing day bringing new highs and deeper fears of an inevitable collapse. Section 5. The Day the Tulips Wilted, February 1637. The tulip market, which had been soaring to unimaginable heights, suddenly crashed. It began with a few hesitant sellers, then a trickle, and finally, a flood. Panic set in as buyers vanished, realizing the exorbitant prices they had agreed to pay were unsustainable. The bubble had burst. Overnight, fortunes were wiped out. Those who had borrowed heavily to invest in tulips found themselves drowning in debt. The once prized bulbs, now worthless, became symbols of folly and ruin. The Dutch economy, though not entirely dependent on the tulip trade, suffered a shock and the nation was left reeling from the aftermath of the speculative frenzy. Section 6. Picking up the pieces, the aftermath of mania. The bursting of the tulip bubble had a profound impact on Dutch society. While some historians argue that the economic fallout was less severe than often portrayed, the psychological and social consequences were undeniable. The mania had exposed the dangers of speculation and the fragility of markets driven by hype rather than intrinsic value.
The Dutch government, eager to restore order and confidence, took steps to regulate the tulip trade and prevent a repeat of the crisis. Laws were passed to nullify contracts and limit future speculation. The tulip market eventually stabilized, but the scars of the mania lingered, serving as a cautionary tale for generations to come.
Section 7. Echoes of a burst bubble, tulip mania, and modern finance. Centuries later, the story of the Dutch Tulip Mania continues to fascinate and hold valuable lessons for modern society. It serves as a stark reminder of the cyclical nature of markets, the dangers of speculative bubbles, and the human tendency towards irrational exuberance. From the South Sea bubble to the dot-com crash, history is replete with examples of financial bubbles driven by speculation and the promise of quick riches. In each instance, the pattern remains eerily familiar. An asset class experiences a rapid surge in price, fueled by hype and speculation, only to crash down to earth when reality sets in. In an era of cryptocurrencies, meme stocks, and online trading platforms, the potential for speculative bubbles remains ever present. Behavioral economist. The ease with which information spreads and the allure of quick profits can easily lead to irrational market behavior. The story of the tulip mania serves as a timeless reminder of the importance of financial literacy, due diligence, and a healthy dose of skepticism when it comes to investment decisions. Behavioral economist. It underscores the need for regulatory oversight to prevent market manipulation and protect investors from the worst excesses of speculation. While the tulip mania is often remembered as a cautionary tale of financial folly, it's important to acknowledge the enduring legacy of the tulip itself. Beyond the speculative frenzy, the tulip remained a beloved flower in the Netherlands and around the world. Today, the Netherlands is renowned for its stunning tulip fields, attracting millions of visitors each year. The Keukenhof Gardens, a sprawling display of over 7 million tulips, stands as a testament to the enduring beauty and allure of this flower. The tulip, once a symbol of speculation and ruin, has been redeemed as an emblem of spring, beauty, and Dutch heritage. Some accounts portray the mania as a period of widespread chaos and economic devastation, while others downplay its significance. Economic historian. It's important to separate fact from fiction and examine the event with a critical eye. Recent scholarship suggests that the economic impact of the tulip mania may have been less severe than previously thought. Economic historian. While there's no doubt that individuals suffered financial ruin, the overall Dutch economy, bolstered by its diverse industries, proved resilient. The tulip mania, while a fascinating episode, should be understood within its historical context, avoiding exaggerations and sensationalism. The Dutch Tulip Mania, though a distant event from the 17th century, continues to cast a long shadow on the world of finance and economics. It was a time when the price of tulip bulbs reached extraordinary heights, only to crash dramatically. It serves as a cautionary tale, a stark reminder that even the most seemingly innocuous asset can become caught up in a speculative frenzy. Investors, driven by the fear of missing out, often lose sight of the intrinsic value of the asset. The tulip, once a symbol of beauty and luxury, became a vehicle for greed and irrational exuberance. People traded their homes and savings for a single bulb, believing prices would only go higher. The lessons of the tulip mania remain as relevant as ever in today's interconnected and fast-paced financial markets. The parallels to modern-day bubbles such as the dot-com bubble and the housing market crash are striking. It serves as a timeless reminder of the importance of sound investment principles, the dangers of speculation, and the need for vigilance in the face of market hype. Investors must always be wary of the herd mentality and the allure of quick profits. The ghost of the tulip mania continues to haunt us, urging us to learn from the past and navigate the complexities of the financial world with caution and wisdom. By understanding these historical events, we can better prepare for the future and avoid repeating the same mistakes.